You finally find an investment that can't lose. You put your money in. You feel smart, responsible, grown up. Then life happens. Your rent is due. Your car makes a noise that sounds expensive. Your card declines confidently. And suddenly, your money is trapped in a place that takes weeks to escape with a haircut. You're not broke. You're just locked in. Bills don't wait. Emergencies don't respect your 5-year plan. And nothing hurts more than knowing you technically have money, but can't touch it. You start doing mental gymnastics. Okay, if I sell this, after approval, minus fees, minus tax, assuming there's a buyer, congratulations, you've discovered stress in 4K. Most people think investments fail when prices go down. That's cute. The real danger is when you need your money and the market says, we'll get back to you in 14 business days. And this is where it gets interesting, because the problem isn't bad luck. It isn't intelligence. It isn't that you didn't watch enough finance videos. It's something nobody explains in school. Liquidity. Not the cool-sounding word, the boring one that quietly decides whether your life feels stable or constantly one emergency away from panic. So let me show you what liquidity actually is. Forget finance for a second. Imagine your money is water. Your bank account is a small jug sitting right next to you. You're thirsty? You drink. Dinner? ATM. Movie night? Tap the jug. Fast, simple, no drama. That's high liquidity. Now look at your house. Big, valuable, respectable. But that money is frozen into a giant block of ice. You can't drink it, you can't break off a corner to pay for groceries, you can't take a tiny slice to cover your phone bill. You'd have to sell the whole ice mountain. Paperwork, agents, buyers, time. That's low liquidity. Still water, still valuable, but useless when you're thirsty now. Between those two sits your brokerage account. Not a jug in your hand, but not an ice glacier either. It's more like water in the fridge. You can get it, takes a little time, but you can pour a small amount when needed. That's medium liquidity. Now here's the part nobody tells you. On normal days, all of this works fine. The jug works, the fridge works, even the ice mountain has buyers. But sometimes, a financial winter arrives. Markets panic, news screams, everyone runs to sell. It's like a massive cold front moves in and freezes the entire system. Suddenly there are sellers everywhere, and buyers disappear like free food at a college event. Your fridge water freezes, your ice mountain becomes a decorative sculpture, and only the small jug in your hand still works. Cash. The boring thing everyone laughs at for not growing. That's liquidity during a crisis. Not theory, survival. This is why people in 2008 had houses, stocks, businesses, and still couldn't pay rent. They weren't poor. They were frozen. Now watch how this connects to investing. Most beginners think smart investing means put every dollar somewhere it grows faster. Sounds logical. It's also how people build beautiful financial prisons, because growth without liquidity is like owning a restaurant in a desert with no roads. Impressive, useless when you're hungry. Quietly, rich people think differently. They don't just ask, how much can this make me? They ask, how fast can I turn this into cash on a bad day? That's why boring investments like broad stock market ETFs exist. Not flashy, not exciting dinner conversation, but liquid. You can sell them quickly. You can sell a small part. You don't need permission from 3 lawyers and the spirit of the housing market. It's water in the fridge. And that's powerful, because liquidity gives you options. Options mean calm. Calm means better decisions. No panic selling, no credit card disasters, no begging your future self for forgiveness. Now zoom out. This affects everything. Your salary feels smaller when your money is locked. Your savings stop feeling safe when they're frozen in assets. Students panic over small expenses while sitting on investments they can't touch. Prices rise, emergencies stack, stress becomes background noise. And people start saying things like, I make good money, but I always feel broke. Translation, your water is frozen. Liquidity doesn't make headlines. It doesn't trend. It doesn't sell motivational posters. But it decides who sleeps peacefully and who refreshes their banking app at 2 a.m. Here's the calm truth. You don't need to be rich to use this. You just need to respect 3 invisible layers of money. The jug you can drink from today, the fridge you can open this week, and the ice mountain that builds your future. Most people accidentally turn everything into ice, then wonder why life feels hard. Low liquidity doesn't destroy your investment because it's bad. It destroys it because life has terrible timing and zero sympathy. Smart money isn't just about growing. It's about staying liquid enough to breathe while your future quietly compounds in the background. That's how you build wealth without losing your mind. And if you want to keep learning how the money system actually works, staying subscribed just means you won't miss the next blind spot before it costs you.